I'm Pat Soldano. I'm president of Family Enterprise USA and Policy and Taxation Group. Family Enterprise USA promotes generationally owned family businesses and their lifetime of savings in Washington, D.C. at a national level. We represent all sizes of business, small, medium, and large, and all industries. Our webcast today is today's insurance market conditions, risks, and threats. The insurance industry is facing unprecedented challenges, from extreme weather to cybercrime. Carriers are stretched very thin. Today, Jim and Tony are going to discuss the market trends shaping the industry's future, top threats in this rapidly evolving, complex landscape, risk management solutions that create the biggest impact on personal and business risk with a focus on cybersecurity. So I'm very pleased to have with me today Jim Kane, who leads the private risk practice for USI. Jim has been in the insurance industry and have a career in this business since 1985. As I just mentioned, he is the lead on personal risk practice for USI, and he's been with USI since 2014. Jim is a certified insurance counselor and a certified risk management in his designations. He has been published in the Wall Street Journal, the New York Times, Fox, IPI, spoken at many, many wealth management conferences, as I will know. We've participated sometimes together. He's very well known in the family office space and successful individuals. And we really appreciate him being on this call today because he has a wealth of knowledge that he's going to share with us. And he is a graduate of University of Notre Dame. Tony Gebely is the CEO of Annapurna Cybersecurity. He is a seasoned cybersecurity expert with over 2 decades of experience in the information technology field. Tony is recognized for his technical transformation, platform building expertise, and high-level leadership roles such as Director of Digital Strategy, Director of Technology, and Chief Technology Officer. He is passionate about helping families, successful individuals, and families protecting their assets as well as their reputation. So welcome, Jim. Welcome, Tony. Really appreciate you being on this webcast today. And Jim, why don't you go ahead and share your screen so you can move your slides, and I will turn it over to you.
Thanks, Pat, for that gracious introduction, and great to be here with you today. Thanks also to Tony for joining us. We have a lot of information to get through, so why don't we just jump right into it. You've gotten our backgrounds from Pat. This will be available in today's PowerPoint, so I won't bore you with more information on Tony and me. Just quickly, we'll run through what we're going to do today. We'll talk a little bit about the market in general. We don't think we could possibly hold this event and not address some of the situations that we're facing in today's market. In 40 years, it's the most difficult one that I found myself operating in. But we're going to drill down and talk a lot about the cybercrime exposure and its related risks. That's why Tony has joined us, and he's got an interesting approach to addressing those things before there's a problem. So again, glad to have him here with us, and it's a very serious issue that lots of people are concerned about. We'll talk about the evolution of that and the risk management strategy you can build around it. And then we'll close out with both a case study and kind of build around USI's approach to this, which we call FIX, which is an acronym which I will address when we get to that section. So lots of questions have come in and surrounding what are the issues driving the market. And the reality of it is that a lot of what you're hearing in the press or online has to do with rate. And I would never come onto this call and not suggest that rate will definitely help the insurance companies get more aggressive in their underwriting and back into the market. However, there are additional items that go to that. That first picture is a factory in flames, and the property insurance issue is not a California or wildfire problem. It's not a hurricane or a Florida problem. It is a industry-wide problem where the rates are inadequate. They're so inadequate that I bring up the idea that you can't focus simply on rate, that they're so far behind that if they got all the rate they asked for, it wouldn't solve the problem. There was a problem with the rates in the insurance industry long before the reinsurance market has weighed in. That's the second block we're going to look at. We've been through 2 rounds or 2 cycles of renewals where the insurance companies are seeing 10 to 25% increases on their reinsurance coverage, which is essentially their hedge against large losses. So they went into that cycle already behind on rate, and then had 2 sessions where the cost for them to pass those risks on to a reinsurer have gone up and not seen any rate relief from that. And so when I say to you, rate matters, it's just not the only problem. It's a bigger issue than that. We're going to roll into the hurricane season with the water temperatures in the Gulf somewhere around 100, over 100 degrees, which is hotter than it's ever been. And so I don't expect it to be a quiet hurricane season. If we're going in where the water temperature is that high, it'll draw the moisture off, and the storms will be very, very severe if we get hit with one, which is a good example of some of the other issues that we need to address. The third picture here is an automobile crash, and I deliberately picked a commercial picture because it's not simply personal auto, it's automobile across the industry. We've lifted the 55 alive law that was passed, and we have places around the country that the posted speed is 75. And just like on the Jersey Turnpike, if it's 75, everybody else is doing 90, and if you're not, they're riding your bumper. So we're going faster. That is a result of COVID as well. The roads got clearer, people rode faster and more recklessly, and that's come home to roost as the roads have gotten busier. We've also seen increased cost in repairing vehicles now. A bumper used to cost roughly on average $1,900 to replace, and a simple dent in a bumper can cost as much as $3,500 today, because we'll have to replace a camera and sensors and technology that are contained in those bumpers that were not there before. The supply chain issues are a problem. It's taking longer to fix cars, get parts. You're in a rental vehicle longer, oftentimes exhausting coverage that the insurance companies are pressed to then honor. When you put all those things together, the automobile business is not any more lucrative or profitable than the property side, which puts even more stress on the business. It's one of the leading lines in terms of the amount of premium that it generates, and you add to that's losing money on an underwriting basis in a volatile stock market and investment market, which does not give the insurance companies a chance to make up those losses in other ways. And so this last piece I put in here is risk management. And one of the questions we'll get asked is, what can we do about it? The most important thing is not to have us anxious and wringing our hands over things we can't control. We have no control over a commissioner's office inside a state. We have no control over rate requests from insurance companies. But what we can do is control the way we treat the assets we own. And we'll talk about that also in the course of the discussion on cyber and things that you can do. We like to discuss with our clients and our prospects that there is no such thing as a good claim. There's only bad claims. And the only solution shouldn't be to find a way to try to get you back to even when something catastrophic happens. And that has not changed since I've been in the business. In the end, what we should be doing is figuring out ways to put speed bumps and roadblocks and loss mitigation and loss control in place long before the loss occurs. It becomes imperative that becomes the process when you have a market where insurers are leaving states. They're non-renewing large numbers of existing clients in order to reduce the risk because they have limited capacity, and they're seeking rate. The best answer is to put your risk as safe as it can be for you and your family, and then ultimately making it as attractive as possible to an insurance company that potentially would take the risk. And so lastly, and our feature will be to talk about cyber risk. It remains the number one, or certainly in the top 2 exposures that folks are worried about when we do in survey or see surveys in the industry. And unfortunately, or kind of disappointing, is the fact that despite that concern, despite that constant worry about cyber, the uptake on the protection for it and the risk management steps has been woefully low. And I think in large part that is out of a lack of knowledge. And so the decision is, if I don't know about it, I'm not going to engage in it. And we need folks to do the complete opposite. There are steps you can take to protect yourself and to identify the things that would help you and assist you with managing that exposure. And so we'll talk about that as our topic for the day. We'll also address some of those questions that you sent in regarding the industry as a whole. So here's just some quick notes on the activity in the cybercrime world. You see here that about every 40 seconds a cybercrime occurs. So in the time that we're on this call together, there'll be about 90 attempts from cyber criminals to breach or get to information or try to control a computer. This bar chart will show you some of the top causes of cybercrime and losses. But the one at the top is the business email compromise, and email account compromise is the leading cause of financial loss. And we'll talk in our discussion today about protecting yourself from that. The single biggest concern for this risk is human behavior. The number one cause of a compromise of your email is clicking on a link from somebody you didn't know or did not trust. And so things like that and being aware of it. On the business side, we definitely have raised the bar. There are processes put in place, a good corporate effort on this, such as what we do at USI. We occasionally will get an email from our own company, which has a phishing link in it. And if you click on it, they then take us back to the training we've been given to look out for these and what the signal should be not to click on it. And so raising the awareness and raising the knowledge of the things that draw you in is really an important piece of gaining protection for this before we ever go out and talk about an insurance product. Tony has joined me with this, and I was very interested in what he's done in launching his business. I won't give that away, but it's a good example of what we talk about is managing the risk long before the claim comes about. And then lastly, this is a $10.5 trillion crime spree, and one that deserves a lot of attention because once you get into it, it's a very difficult road to move through. So I think most of you are probably familiar with Chubb and who has been a leader in this space. And this is a survey that they did with consumers regarding the cyber attacks. The orange bar, the darker orange bar on the top of each of these questions is from all respondents, and then those on the bottom is those who currently have a policy. It's an interesting dynamic as you look through this study. On the top, it's the ability to replace money that was stolen from a bank account is a concern to 64%. Yet only half of the people who currently have a policy are as concerned about that. And I think as you're going to see today and talking with Tony and the audit process, that as you gain more knowledge about it, it shifts the area of focus and gives you a better sense of some of the things that need to be done to protect yourself. And so if I jump down to the bottom, because you'll get a chance to see the survey with a copy of the PowerPoint. But you take, for instance, the second one or third one from the bottom, the access to an expert to evaluate your vulnerabilities exceeds those that have a policy. So interestingly, you've already bought protection, yet from the general populace, it's a higher percentage of the participants who are now aware of the fact that understanding and evaluating the vulnerabilities and continuing to test that is a really critical piece of the plan for preventing cybercrime. Ransomware attacks would be a second one that rises. That's not typically in the front of mind when you first start addressing the issue of cybercrime, but you quickly become aware of the possibilities of having all of your data locked down, or in the case of that business a couple of years ago who was providing electricity, and they locked down the computers to prevent them to be able to sell the product. So those are things that you become more aware of as you basically educate yourself in the issues that surround the cybercrime. And so I'm going to turn this over to Tony to walk us through the cybersecurity and the evolution of managing that risk. Thanks again, Tony.
Yeah, thanks, Jim. Appreciate it, and thanks for the introduction, Pat. As you learned, I run a firm called Annapurna Cybersecurity. I came out of Family Office Exchange. I was with that firm for 12 years, most recently their chief technology officer. And during my time there, I was the subject matter expert on cyber for the membership base. So I've been working with families and family businesses for the past decade to help them kind of navigate these really confusing and complex waters around cybersecurity. And ultimately that led to me launching my own firm. I felt like there was a clear path forward with cyber, and I wanted to help people walk that path and get them to a place where they could be cyber resilient. So really the goal in our work is to provide that clear path. And when I say towards cyber resilience, what I mean there is that not only is the organization able to prevent most cyber threats, but that they can also quickly recover in the event that one occurs. And I like to start with this cyber maturity model here that we created, and take a moment to read it and try to find out where you and your business are on this model. It starts at the bottom with an ad hoc approach to cybersecurity, where you lack a formal cybersecurity program, and you just rely on ad hoc measures, best practices. You don't really know what your weak links are, because you really only are as secure as your weak link. And that could be in any system, any application, any device, and it could be unbeknownst to you. But there are lots of best practices that float around the internet. Everyone talks about multi-factor authentication and how to use password management tools, and that's just really the beginning. And if they may not be your weak links, you don't know what your weak links are. Sometimes you need a professional to help you find them. The next step up would be developing, and at that point in time, like, you start to implement basic measures, and you need to develop an awareness of cybersecurity. And then inside the organization is a growing understanding of the need for a structured program. I would say that most of the organizations that we work with are in stage 1 or 2. It's really scary when I find an organization in stage 1. We have to get in there and start to find the weakest links in a prioritized fashion and mitigate them immediately. As you move up this maturity model, you have defined, managed, and optimizing. So defined, it's when you have established a formal cybersecurity program, you have documented policies, procedures, and processes, and your measures are now proactively implemented. And I don't see a lot of folks there, especially in the family business space. I see a lot of the developing phase, like they know that they need to do something, they're not really sure how to do it. They might hire a company to come in and do a threat assessment once or twice. But once that engagement's complete, they really don't know how to act upon it. Managing and optimizing, I don't really see a ton of folks in this space yet. I mean, in the technology sector, for sure. And some people, have to, be SOC 2 compliant or something and be in the manager optimizing phase. But just, if you could take a second, figure out where you stand on there, just to take a mental note and keep that in the back of your head as we go through the subsequent slides, so you can see how you can progress in this space. Jim, next slide, please. So, as I said, a lot of businesses know that they should do something about cybersecurity, but I don't like to do things unless I have clear goals. This isn't a problem that we can just throw money at to make it go away. I think that we should, take a minute and define some clear goals around cybersecurity. And your goals may differ, but here's some goals that I find are applicable to most companies. Obviously, risk reduction. So, in being proactive in the cybersecurity space, you're not going to eliminate all of your risks. That would be unrealistic. But the focus should be on discovering them, prioritizing them, and then mitigating the most significant risks. Preferably all of them, but you should start with the most significant ones. And a third party can help you find what your most significant risks are. Another goal is resilience and recovery, which I alluded to previously. But we can be proactive, but if something does happen, how can we quickly recover? Compliance and reputation management. Ensuring compliance with relevant laws, regulations, and industry standards. Like if you're registered with the SEC, there are a number of cybersecurity concerns that you need to look out for there. If you work for the government, they have a separate cybersecurity framework that you have to adhere to. So just looking out for any compliance that you need to adhere to is of utmost importance when investing in cyber. And then this is a fun one: balancing security and usability. Obviously the way to be the most secure as possible is to not use the internet or technology at all, which is ridiculous. So, coming a few steps down from that, like, we can still lock things down to where it's difficult to work, right? But you're very secure in that way. So you have to strike a balance between, your security controls that are put in place by your security team and the usability of all of your technology. You want it to still be usable. You want to still be able to easily do your work. It shouldn't be too disruptive. So that it's a conversation that has to be had with each risk and how you mitigate it with the business folks. And then cybersecurity maturity. You just saw the continuum. A key goal is progressively increasing your cybersecurity maturity over time. And, hopefully getting to one of those top 2 tiers where you're very mature and you're regularly assessing your cybersecurity posture and enhancing it. Next slide, please, Jim.
So Tony, before we move off that question for you, is a part of this is that the fact that this, unlike so many of the other risks we face, is moving so quickly. It's almost as if by the time you get caught up, right, that it's drastically changed. Do you think is that part of the challenge and the anxiety that the clients you're working with talk about?
Yeah, certainly. And I'll go into that in a little bit more depth in a moment. But there are cybersecurity frameworks that we can use that are regularly updated that will, as long as we adhere to them, will be keeping pace with the threat landscape. But certainly, the confusion around this topic, it seems difficult to tackle. It seems like it's ever changing. The motives of the threat actors are ever changing, and that just makes a lot of folks just stop in their tracks and be like, there's nothing we can do about it. But there are things you can do about it, and it's proven that there are things you can do about it, and that's really what I want to outline in these next couple slides. Just a simple approach. So, change slides here. So with our goals in mind, how can we approach this topic in a structured manner? And what I do, what my company does, is we start by auditing against a cyber framework. And what that really is, it's an evaluation of your cybersecurity posture against a framework. I'll go deeper into frameworks momentarily. You don't have to reinvent the wheel here. Best practices could be dangerous and not really expose your weak links, but having a third party take a look at everything that you have that revolves around technology. I'm talking the family business, the family office, the households, the devices, everything should be looked at because you don't know where your weak links are hiding out. And an expert like myself and those in my company, we can actually provide you with a prioritized list of risks that you face and offer you steps to mitigate them and actually help you mitigate them, or work with your MSP or internal IT staff to mitigate them. And without doing this, you end up with that ad hoc approach, and you could be riddled with weak links. And I see that all the time. Folks will. I mean, it even goes into like physical security. One example that it's not an example, it's a thing I see actually all the time. I'll work to ensure that all of the infrastructure that a business has in, a server closet or something is kept up to date from vulnerability patches. But the door will be unlocked, or maybe there may not even be a door, or, going even further into physical security, maybe there's a door, but you can just pop the ceiling panel and get into that infrastructure. So, these are things that I'm looking out for when it comes to cybersecurity, and it does bleed into some other types of security. But this allows you to have a structured and I think stress-free approach to cybersecurity, to an enhanced cybersecurity posture for your organization. If you can go to the next slide, Jim, I'll dive into the framework world. So, and I keep mentioning a framework and how best practices could be detrimental. These frameworks are built by large organizations, like NIST has one, ISO has one, the Center for Internet Security has one. There's probably 15, 20 of them out there today. And they all have their little quirks and are applicable to different industries. We use the Center for Internet Security's risk assessment method. And essentially it's several hundred cybersecurity controls that are mapped to attack patterns that are seen in the world today. And it's regularly updated. So essentially, if you implement the cybersecurity controls properly, it will mitigate your threats for all of the attack vectors that they're finding out there today. Now, yeah, things are, like Jim said, things are rapidly changing. But, they are changing, but I think that a lot of what's happening when things are changing is, either, a different flavor of malware comes out that's still malware, or a bad actor might stack vulnerabilities on top of one another. They might enter your infrastructure through a network device and then find a vulnerability on someone's computer, and in that way they stack two vulnerabilities to get in. That's really what we see the most in the changing landscape of threats. But these frameworks provide really a blueprint for managing these threats. And you should choose a framework and then choose a company that can audit you against the framework. And a lot of folks in this space, they don't even think about frameworks, they don't know about frameworks, but I think that every person that's in business and worried about cybersecurity should have at least a cursory understanding of what a cybersecurity framework is. Because when you get audited from whatever firm audits you or performs a threat assessment, same thing, they're using a framework. And a lot of times it's behind the scenes, you don't really know what it is, but it's important to know what framework they're using and for you to do your own research and see if you think it's applicable to your type of business. I mean, there are certain ones that are for manufacturing businesses that focus on industrial controls. Center for Internet Security, I find, is the best that covers the personal side of things around governance of a program, around the education efforts within an organization. Not all of the frameworks will cover those aspects, and not all the frameworks are strictly technical either in nature. Especially the Center for Internet Security's one. So it's important to choose one, and then once you have an audit complete, now you have a prioritized list of actions that once they're completed, once those actions, those recommendations are put in place, you're mitigating all of the threats that this framework covers. And if here's like a little bit of a caveat, this isn't a one-time thing, right? So if you buy another property, buy another business, anything massive changes with your infrastructure, you should get another little touch-up audit. If the new version of the audit comes out, you should again do a little touch-up audit. And cybersecurity providers will do this for you. It's not always like a huge operation. Like once you have your initial alignment with one of these frameworks, all the subsequent work is quite easy, won't be a lot of hours. A lot of folks, including our shop, we're moving towards a consistent audit over time that isn't just a every other year sort of thing. We're going to begin consistently auditing in real time using read-only connections into Microsoft 365. I'm getting a little bit nerdy now, sorry, but that's where we're headed. I think it's a better way to do things because how terrible would it be to perform an audit and then the day my team walks away, they fall out of compliance with that audit because an IT guy screwed up or they hire someone and forget to enable multi-factor authentication or conditional access or something like that. Then they could go however long they go until the next audit. They're not compliant with the framework and that's their weak link right there. So I think that the world's moving towards a real-time auditing situation, and it's important that a third party does it too. If you have your own IT staff self-audit, you're really they're gonna be soft on themselves. And this should be a difficult, shouldn't be difficult, but it should be black and white, right? Like if your IT staff or your hired MSP isn't adhering to a specific control, you should let the stakeholders know that here's a risk and not hide it. So I think it's important to have a third party do this. And a lot of folks will tell me we're too small. We don't need to be audited. But cybercrime impacts everybody. And you may be small, like operationally, your footprint and your architecture may be, maybe you're all in the cloud, you only have a couple laptops, you're still a target. And there are still connections between the applications you use. There's still real people in your organization that are seen as soft targets. And getting a third-party audit at maybe even at an early stage in your business, when you are small, architecturally speaking, that can provide you with the framework on which you build out your technology infrastructure with cybersecurity in its DNA. So I don't really think that anyone should be exempt from, any business should be exempt from a threat assessment. I think it's a good idea for everybody, even if they think that they have a pristine cybersecurity program, everything's buttoned up, but you've never been assessed. It's time for an assessment, in my view. But stepping back to why I'm talking about all this, this is your approach, right? Like this takes the confusion out of the approach to cybersecurity. Your approach is hire a third party, can be anybody, it doesn't have to be me, obviously. have a threat assessment performed on your entire operation and look at that prioritized list that you're provided of things that are, could take you down, and start to work through them with your IT staff. I mean, there's your approach. I mean, it's once you understand the world of frameworks, that I find that the confusion around this topic tends to go away, and people really understand their framework, and they know that, like, let's say you hire someone to audit you against the NIST framework, but you didn't really like working with them. Well, now you know that you just adhere to the NIST frameworks. You can find another company to audit you against the NIST framework. So just that little bit of knowledge about the frameworks, I think, is hugely important, will go a long way, and can really drive you towards cyber resilience as an organization.
Tony, before we hand it back over to Jim, my question for you is you keep talking about this audit. Should you have a cyber audit even if you have no cyber program at all in place? And I think you addressed that a little bit, and I think the answer is yes, but maybe you could quickly answer that.
Yeah, the answer is definitely yes, because an audit in the absence of infrastructure and controls gives you that roadmap. Now you know that when you get a server, it needs to have this sort of configuration. You can send your IT team off to set that up with this in mind. When you bring in your first employees in your Office 365 environment, well, now you know that you need multi-factor authentication and conditional access and Intune turned on, because that's what you've adhered to initially with the cybersecurity framework. So it really provides you with that roadmap of implementing cyber hygiene as you go, as you build out your company. So I think it's a good idea.
Okay, that's great. Well, Jim, I want to get to our questions, but I want you to finish your part of this presentation.
Okay, great. And just before I leave this slide, I think the most overlooked step in the risk management process is monitoring. So this is not static. It's fluid, and it has to continuously. We're on the insurance side, we're doing reviews on an annual basis, because within a year's time, lots can change, and this is no different. So I agree wholeheartedly, Tony, with your comments there.
Thanks,
So let's talk a little bit about fix. We have a CEO at USI that's kind of fixated on acronyms, and this is one of the ones he's come up with to help us remember how we do this. But it's helpful to think about it this way in terms of addressing this risk or any of them. Is first let's start with the F and think about financing. Insurance would be an example of that, but there are alternatives to that. You also can invest in things. If I was going to use the cyber Tony's recommendation on an audit. Would be a good example of an investment even before you did the insurance. That makes sense because it will certainly reduce the overwhelming feeling you're going to have about addressing everything at once and give you a roadmap. So a good example of a finance approach before even putting the insurance or transferring it through a bond or surety bond or a traditional insurance program. The I stands for improving or preventing losses. And so as I said earlier, no good claims. So let's make sure we have a risk management loss control effort where we're going to either mitigate or potentially eliminate, if possible, a risk. If you don't want to get hit driving a motorcycle, then don't buy one, right? That would be complete avoidance. Not a lot of them can be treated that way, but you can go from everywhere from avoiding it down to reducing the potential loss to mitigating the chance that it would occur. And then lastly, expanding, X for expanding coverage or carriers and services. And particularly in this environment, there's questions that have come in. What do you do when there's no carriers out there writing, and if they are, they want to charge exorbitant premiums. And so working through this and starting with, what can we invest in to prevent things? How do we have practices that help us make this an attractive asset for first us, the business and or the family? And then lastly, can that lead to expanding coverage or being able to more efficiently spend the money to protect ourselves? So we had these two claim scenarios. So I'll stop there, but go ahead, Pat, and if you want to fire away.
No, I forgot you had these claim scenarios. I think they're very important. So go ahead and cover them.
Yeah, so we just thought we would give you a couple of scenarios and help kind of put a point on this conversation around cyber. And so this is an owner of a business, a long-term bookkeeper who was always trusted and did a great job. At times, he would review the personal finances and pay some bills on his own, but the practice continued for years. when the bookkeeper was out sick at one point, came in and started reviewing the balances and was stunned to find that money was missing. After he did his own research, found the bookkeeper had been sending money via Venmo from the client's account to her boyfriend's account, and labeled the transfer as office expense up to $1.2 million. And that was a good example of using cyber capabilities to remove an asset without ever leaving the building. So that's an example one in terms of that. Internal controls are important, monitoring people's performance no matter how long they've been with you, and a good example of even somebody that's a close associate that was trusted can lead to a loss. The second one we put in here is that client also ran a successful real estate business, closing on a new property. And the long story short on this one, out of the country on vacation, notice comes in to one of the assistants who is told that there's a change in the instructions and transfer $800,000 from the account for this real estate purchase. When she confirmed for the boss that she had handled the last minute change, he said there wasn't one. And it turned out that they had transferred the $800,000 onto an account which was vacated before they could ever get any action in place. And again, another dupe of a mimic of an email, or pretending to having taken over the email account to be able to get $800,000 transferred into the criminal's account, which was then again swept immediately. So just a couple of examples that we have seen in the space. So Pat, that's our last slide.
I think those real life stories are so important because we
Yes.
talk about it, but we need to hear the actual instances of things happening for people to really realize how important it is to have risk management. And so at that point, I'm going to start with the 30,000-foot level question and then work down into some of the more detailed specific questions. So this is the big question. What's the biggest change in the insurance industry in the last decade? And what will be the biggest change in the next 10 years? And on top of that, maybe you could address risk management solutions that are available and that will be available. Because as you keep reiterating, and I've heard so much from USI, it is so important to manage the risk at the front end, and so that you have less claims.
So I think on a positive note that there have been technology advances that have actually reached the industry and been put in practice. I used to like to joke that in the insurance business, we still think the ATM is a brand new, exciting technology, right? But the reality of it is, I think the use of LiDAR, I'll pull flood insurance out as an example, that the evolution of flood away from purely and only the federal government, one of the drivers was the use of LiDAR and mapping out the topography and then modeling how the water would flow. So I no longer rate properties in a 1 mile square radius, suggesting that all those properties are equally exposed to flood. It's not true because of the topography and the geography that are in play. And then secondly, as a result of that, the federal government loosening the rules around using private flood, getting back into it. There was a point where flood was in a property policy and it ultimately got lifted because it was more predictable, catastrophic, but predictable where it would occur, in which case it didn't make sense to charge everybody. I think the perspective on that has changed, and that would be an example of using technology. Another one would be use-based insurance and tracking the use of a vehicle. It's interesting that Progressive, Travelers, Safeco, they have their own devices that you can plug into the car. Anybody that's bought a car, I'd say in the last 5 years, has a computer in it that can tell you exactly where the car was, what day of the week it was, what time of day it was, what the weather was, the speed you were going, and whether you stopped with a hard brake. And so when you take a look at that and say, we actually have the capability to go back and rate automobile based on usage, that makes a lot of sense. It's creeping in slowly but surely. I think there's also a generational break. At approaching 62, I'm less comfortable with the technology than my 20-something children who think that my concerns are an old man problem, right? But the reality of it is, we'll give up some of our freedoms if it increases our chance for protection at a lower rate, and I think you'll continue to see that go. So that would be on the positive side. On the negative side, that the technology has also led us to get a better understanding of what the risk is, and just how woefully poor we were in predicting results. And on top of that, I'm not going to get into a political argument about about the climate, but the Earth's getting warmer. When I tell you that the water in the Gulf is over 100 degrees and never has been before, that's empirical. You can't argue that something's happening. As we get a warming globe, the challenge is that we won't necessarily see more storms. We're seeing the same pattern of storms. What we're seeing now are the intensity. It's considerably worse. We've had tornado warnings here just outside of Philadelphia, which, you know, I'm 62 years old and I can't remember tornado warnings in the month of August. We had heat and we had oppressive the summers in Philadelphia, but not with tornadoes. And that's a good example of the impact of that. You're seeing more flooding along the coast because the water level is rising because the ice caps are melting. And so all these things come together. We've factored in, we built an insurance product based on facts that have changed drastically in the last 10 years. And although we've caught up with some of the technology, I'm not sure that the method in pricing it has also increased. And then lastly, most recently, I would tell you, Pat, that I think that the challenges in the business that in 40 years, I've never had to tell somebody we didn't have a solution, and we've done that in the last 2 years. The fact is that we should get comfortable with the idea of the non-admitted versus admitted use of insurance. The admitted one is simply an insurance company goes to the department in that state, they file rates, they say this is what we're going to use them for, and they must adhere to that in order to stay in the guarantee fund where the state will guarantee to pay up to a certain amount. One of the highest levels would be up to $500,000 on a loss. And that's what you get in exchange for filing your rates. Or you can go not admitted, where you have much more control over the rates and the form. You can take things in and out. In this environment, E&S, excess and surplus line, and not admitted forms are not a bad thing. It will give you and the carrier more control to rate and structure a program specific to the risk that you bring them. They may say to you, we're uncomfortable with the wildfire, but if you let me go to non-admitted, I will give you a solution. And let's say we'll write $10 million worth of wildfire, but you're going to be on the hook for the first $1 million. Now that may sound terrible until you realize that you have an $8 million house, and without that offer, you have no coverage, not for fire, wildfire, water, anything. I can put the rest of it in place and at least get you catastrophic coverage in the event of a wildfire. There are also solutions past that to buy that $1 million back if you choose to and spend the money. That's what I'm talking about in terms of helping our clients and helping the folks looking for insurance solutions to understand that not admitted is no longer only for problem cases. It's for more control over how you place the coverage.
Well, since you brought up the wildfires, which is obviously on everybody's mind right now, I'm in California. Serious issue here. Obviously, serious issue in Hawaii now. Colorado. This question came from Colorado. Is it kind of due to these wildfires? Will carriers be pulling out of states like Colorado, Hawaii? I know in California we've definitely struggled here with carriers, and could it reach a point where your residents wouldn't be covered? I mean, I know in California that it has happened where residences aren't covered, but there's the state program, which maybe you can talk about a little bit.
Sure. So as long as I think 4 or 5 years ago, I had a chance to speak at a conference, and I actually talked about Colorado. Colorado had issues with wildfire. It's not as large a state. It's not as populated, but the wildfires were large and impactful to the state of Colorado. Never really hit the papers because it just wasn't affecting enough people. And California's always had that problem. But what we're seeing is because of the change in again the temperature of the globe, that you're getting more drought, and so or you're getting inundated with rain. So great that we had all that rain back a few months ago in California, but that's just going to provide a lot of vegetation to grow and ultimately dry out and be tinder for potential wildfire. And that's the pattern that we find ourselves in. The states have, for the most part, I think, threw up enough roadblocks that to actually physically exit the state becomes difficult, because unless you're separating each line into a separate piece, a separate business, it's hard to exit the state because you have to give everything up. And that would be a financial blow to the carriers. So I don't think you'll see them, quote unquote, exit the state like we maybe saw back in the 90s where they tried to do that. But what they are doing is they'll shut down for new business, which they have the right to do, saying we can't afford to do this, so we're not going to write new business in the states, or define what they won't do if you're sitting in a wildfire zone, if it's all frame, if you have Italian cypress trees all around the property, which are the equivalent of lining the property with essentially matches, because they're going to catch fire and go right up to the roof and burn the house down. They look beautiful. There's no doubt about it. It changes the look of the property, but the choice is to run that risk or take them out. And so they can put those things in place. That has already happened. One of the last writers in the state of California was State Farm, and they have shut down most of the state for new business. And so that's the first effort. You're seeing that in Florida, which has a different problem. The concern we have in Florida, I've said for a while, I think California's had it very difficult. The challenges there are enormous, and there's a good chance that if the wind blows really hard in Florida, they're going to ask you to hold their Chardonnay and go run it right past California, because they have financed their challenges by the citizens market. They've now depopulated that with startup companies that are undercapitalized by industry standards. Normally, we'd say there's $2 a premium or $1 surplus for every $2 a premium. They've allowed insurance companies to come into existence with $10 a premium for every $1 in surplus, and the surplus is the dollars they pay claims out of. And so if we get hit with a Category 5 in the right part of the state of Florida, in addition to a very, very large loss, we will see, I think, record bankruptcies because they're undercapitalized. That would be a real stressor. Florida doesn't have the money. I don't know if anybody knows this, but I don't think the federal government has the money either. So I don't know where you go if and when that occurs, but that's the problem. And the reinsurers are not willing to take that bet because they're also experiencing underwriting losses for the last 3 years. So it's a cycle. Again, I'll go back to my point when I first started, that the most important thing is rate is not the only thing that's going to fix this. We've got to fundamentally change the way we're underwriting business. We got to fundamentally change for the, and look, the industry's guilty of this, right? We've created a policy that drives almost toward a maintenance policy, and that's not what it was intended to be. But as what we try to get our clients is, here's what you can control. Protect the property. I know you don't want to take the cypress trees down, but take them down. It's going to make the house safer, and it gives us a better chance to be able to write it. We've had clients that went out in California and bought a herd of goats because they graze. Their neighbor has cows, and they allow them to switch back and forth because they graze differently. As grown up in a city, that was news to me. But goats climb trees and cows don't. So that treatment, right, made that property considerably more attractive to carriers, and we were able to get coverage in place. And where it goes from here, I honestly don't think there's an easy answer. I also like to say in your state, Pat, that the largest owner of land in the state of California is the federal government. Only they think that the state should take care of land that the federal government owns. And so they point to each other as opposed to coming up with a strategy to curtail the growth on those open lands to prevent the fires from running out of control. I think it was the Thomas Fire. I've shared this with you before, Pat. Thomas Fire, the original plan was that they would outrun the fire until they couldn't. Unfortunately, I think 80 to 90 people lost their lives in that fire. But the plan was they would be able to beat the fire to the line where the houses were, and they didn't. And so it's a combination of rate, it's a combination of loss control from the consumers, and then on the government and public working together to reduce the risk that's being caused by the change in climate.
Well, and that risk management, as you said, I mean, we've learned in California, based on the horrendous fires in Santa Barbara,
Yep.
Laguna Beach, is you've got to do that. You've got to surround your property with unflammable plants. You've got to make sure you have that brush
Yes.
that's far enough away from the house. You've got to make sure that your roof is a roof that's going to sustain some level of fire, right? Sprinklers, all of those things, venting on the roof. We've learned those things, and now in
Yes.
some cases it's become mandatory for new construction. And so while I'm not for more regulation, I think
Yep.
risk management is the only thing that's going to save us here in California.
Yes. It's something as simple as the grass welcome mats have caused the house to burn down. I mean, for members, it's insane. And so you're absolutely right. And it's on the industry. I think that's the role we can play, is continue to educate people and say, these are the things that will make a difference for you if we can do those.
Well, so let's switch to another topic, but is certainly insurance, and that is a topic that isn't really talked about that much, but I've had experience in my career with it, and that's kidnap ransom insurance. So, is kidnap ransom insurance really worth purchasing?
But it's interesting. I've always taken the tack with K&R that first of all, let's assess the risk. And I would describe that if I was working with a family that lived let's say in Idaho, and their most exotic trip was they ran up to Minnesota to see the Mall of America, and they did that every other year, right? And so probably not all that worried about that. They're in a local business. They live a very low visibility. That we could talk about it, but in that case, that wouldn't be as high on my list than if I have an energy C-level executive with an energy living in Houston, where some of that exposure actually exists right in Houston, particularly for the energy business. And it's a global firm. That will be a different conversation. That's number one. Number two, the main reason to, I think, buy K&R is if that exposure exists. If you're traveling to hotspots around the globe, if you're in a business that attracts that type of attention, and people know the people at the top are making that kind of money, there's children, absolutely, we should have the conversation. But the reason to do it is not so much for the insurance, because again, it's all bad claims. But the second piece of it is that if and when that occurred, you do not want at that point to sit down at a computer to try to figure out who's the best person to address this. What you will get is an 800 number. You'll be sworn to secrecy. You're not allowed to tell anybody you have it, but you'll get an 800 number, and anybody that has a vested interest in that, if that occurs, has to have that number. And the instant it occurs, you call that, and the person who answers on the other line is going to be able to assess that. For instance, the folks that get kidnapped in Mexico, that's a business. They're gonna barter and trade and debate with you as to how much you're going to pay them, and then ultimately you come to a number and the person will be freed more than likely. Brazil is a very dangerous country, similar in nature with that. If you get taken by a drug cartel or the Russian mob, they have a certain number of hours in order to get you, or you're going to die, and they know that. So I don't think you want to be working your way through an assessment of who could answer that question when it occurs. You need to be able to pick up and then within a phone call, have somebody in there on the line saying, where did it happen? What were they doing? What are they involved in? And make that assessment for you and say, okay, we have this amount of time to find them. Give me everything you can. And that's the most important thing it does. In addition to that, it will pay for some of the things that you have to pay for to get the person back, pay for the ransom. You have all those other things. So it comes down to, is there a risk? I had a client who sent an employee regularly to the Middle East, and it was in an area that was safe, but on either side, lots of trouble. And we talked about it for a couple of years. Not concerned. The individual was highly visible, and their answer to me was, if something happens to this person or their family, don't you think the State Department would deal with it? And I said, well, I don't know that I'd want the State Department negotiating for my freedom, but if that's okay for you, I get it. But I followed up the conversation with him by saying that this individual was the CFO. I said, well, if I can't get to the principal and I can't get to the principal's children, who might I go after next? And kind of looked at me and said, I don't know what you're talking about. I said, well, you're going to follow the money, right? Yes. So what happens if your child gets taken? And he just looked at me and said, well, can I cover that? Sure, you can cover that on a corporate K&R policy. And what you need to think about, if you're doing business in those parts of the country, and they want to leverage that there's a good chance if I can't get to the principal, next one I would get to is the person who pays the checks. That's when he bought the coverage. And so it's making people realize that you don't have to be the main person. It also can be a member of the organization, the family office or the enterprise that becomes the target, because that's the pressure point that they can get to.
Well, and this comes back to risk management again, also,
Yes.
right? Even if you have a policy,
Yes.
Don't go to the same place, same time, same flight,
Yes.
same drive, the same location, the same route. You
Yep.
have to, deviate all of those, because they look, to your point, they look at that behavior. And
Yes.
so, in everything, I'm so glad that you focus on the risk management aspect of this, because I think that's how you mitigate so much of this, and leads probably to the next question, which is, what are the tools for finding the most competitive pricing in this new environment? You kept saying, it's not about rate. It's not just about rate. You need to think about everything else. But what are those tools?
Well, I think we haven't had to do this for a long time because the market's been very competitive. And so what you really wound up doing is saying, so how much more can I get living in a competitive insurance market? And that's not the case anymore. So I think let's start with be open to the idea that you're going to move to a form perhaps a non-admitted form, perhaps a excess and surplus lines, or a shared exposure, right? You can get into a risk group and things of that nature, but then decide what parts of that you really need. And so what are the losses that, you know, quote unquote, put you out of business versus one that would hurt but you could handle, and begin to allocate the dollars toward the most important risk and the treatments of that risk. And so that's the change, I think, in this market. I've gotten questions about captives, which for years we would have kind of on the list, but it never really took root because it was still more efficiently to do the business the way we were doing it. That now comes into play because you may be able to take more control, write your own policy, decide what's going to be there. You'll put a lot of capital up front, but you'll be in charge and you'll be able to help run the insurance program that's covering you. 5 years ago, I wouldn't have even suggested that. I think today, particularly for large exposures, that may have play where it didn't before. So that's number one. Number two is then again, what are the steps that we can take? We don't talk about that enough. Many of the people who are buying insurance from us don't really know what the insurance company would do for them. If they're going to build a house, they'll send a security expert in to look at it before you ever drive a stake in the ground, and look at the plans and say, before you get to this step, come back because we're going to want to do the following, because that'll make this a better risk for you and a better risk for the underwriters. Things like that, taking advantage of the services they provide, having a risk manager involved that says these are steps you should take to make this property better. Think about the picture, the famous picture of the home. I think it was Mexico Beach. Where he went beyond the building code and said, no, I want a steel frame. And after the hurricane, only house standing on the entire beach, right? And so taking a look at things like that and say, are those dollars up front worth whatever the potential loss would be on the back end? And I would say in this environment, absolutely, it will give you the chance to be able to get it done. And as you make those investments, when the underwriter has to look at 10 risks and says, this person has an actual strategy around it. To go back to Tony's comment, if you're looking at cyber, which is also different space in our business, is if they've done the audit and they now have moved from step 1 to step 3, that suddenly becomes a more attractive risk because they're learning what needs to get done, and I'm better investing in that risk for that client than somebody that knows nothing about it.
Well, I think we're almost out of time here. So we have questions we haven't answered, and I noticed no one put any questions in the chat, but and I'm sorry if I didn't mention that you could have done that, but this has been fascinating. I know this has been a very, very interesting and informative presentation to everyone that's been on this call. I will mention again, it's being recorded. It will be sent out. It's also on our YouTube channel. So Family Enterprise USA, we post all of these webcasts and everything that we do on the YouTube channel. So you can feel free to go there. It should be posted in the next 10 days or so. So once again, Jim, Tony, thank you so much for being on the webcast today and providing us just an excellent, excellent presentation.